Hey guys, this is Sahil and welcome to one more awesome episode of Technical Saturday series. And in this particular episode, we are going to jump through one of the most important concepts in the seven-step process that is called as momentum. And in this particular video, we are going to jump through the concept of oscillators based on which we are going to determine the speed of the market. And as I've already explained the basic definition of oscillators itself, which is used to determine the speed of the market, the way we have speedometer in the vehicles like two-wheelers and four-wheelers, based on which we are able to determine whether that particular vehicle is running with slow speed, normal speed, or maybe a fast, and so on. And similarly, for the market as well, oscillators are like speedometer of the market, based on which we are able to determine and we are able to decide whether the market is bullish, bearish, or is in a sideways trend, or otherwise it is like in an uptrend, downtrend, or in a sideways trend as well. So there are two types of oscillators. First is banded oscillators and second is non-banded oscillators. So banded oscillators, the name itself is suggesting that the oscillator, the speed is going to be between that particular band. And what this particular band is, this particular band is between 0 to 100. It is not going to go beyond 100. It is not going to even go beyond 0 as well. So this is how a basic structure of banded oscillators look like. It is like a band of 0 to 100, based on which the speed of that particular sector, like even if you consider the overall indices as well, like Nifty, Bank Nifty, Sensex, the speed cannot go beyond 100. It cannot even go below 0. Similarly for all the stocks, all the sectors, and so on, if we apply this particular oscillator, this is like this particular tool called as banded oscillator, then we will be able to determine the speed, whether that particular stock or whether that particular sector is completely bullish, bearish, or is in a sideways zone. And as the picture itself is mentioning that the speed lies within this particular range itself between 0 to 100. It cannot go above 100 and it cannot go below 0 as well. So this is like a basic structure of how banded oscillators look like. Next is non-banded oscillators, and two of the examples of banded oscillators are like stochastic and RSI. And in this particular video, we are going to go through the concept of RSI itself. Next is non-banded oscillators, and the name itself is suggesting that there is no band. The only line which we are having is a center band, that is 0, based on which the speed can even go beyond 0. On the positive side, it can go beyond 0 on the lower side. Like it can go beyond 0 on the upper side, it can go below 0 on the lower side, which means the speed can go on the positive as well as negative side. And one of the examples, like most popular example of non-banded oscillators, is MACD, which most of the technical analysts or maybe traders also use this particular tool in order to determine the speed of the market. So as I've already mentioned, for this particular video sake, and even in our community as well, we don't go through any of the other tools like stochastic, MACD, and even there are few more tools which are able to determine the speed of the market. But this is one of the concepts which I've learned from my mentors, is that go deep, not broad, because rather than learning a lot of tools, we can only master one of the tool, based on which the data is going to be the same, the indications are going to be the same, but the only thing which is going to create the difference is the simplicity of how we trade in the market, right? So let's jump into the concept of relative strength index, that is called as RSI. And if you look up at the overall perspective of RSI as well, then there are a lot of people, those who go through the concept of 30-70, which means it's like an overbought, oversold. But like if I give you the overall perspective of how this looks like and how this functions, then like almost most of the time it looks like when RSI crosses 70 on the upper side, the RSI, if you use overbought, oversold concept, then this particular tool is mentioning that we have to not buy beyond 70. But most of the good quality trades which are completely bullish, which are completely in an uptrend, those stocks give confirmation beyond 70 itself. But if you are using 70-30 concept, then maybe it can be like you can use it efficiently, you can use it effectively, but the profit, the amount of profit which you will be making, that will be very less as compared to unconventional RSI, because this is like a conventional RSI which overall, like it is described in a lot of books, and most of the traders also use this particular concept. But in this particular video, we are going to discuss about unconventional RSI, which is like a band of 0 to 100, and the center band are like 60 and 40, based on which if the speed of that particular, let's consider any of the stock, if the speed of that particular stock is between 0 to 40, then that particular stock is in a downtrend or that particular stock is bearish. Similarly, if the speed of that particular stock is between 40 to 60, which means that particular stock is in a sideways trend, it is in a sideways like a range bound or choppy zone. And similarly, when it crosses 60 on the positive side, then it becomes like an uptrend, or you can call it as the bullish market as well. And this is like $1 million chart based on which once you start using RSI in an unconventional way, then you'll be able to determine that how easier it is in order to make money through stock market, because a lot of people in this world use technical analysis, they use fundamental analysis as well, but they try to complicate a lot of things. But like once you start being more simplistic with the tools, with the indicators which you are going to use in terms of trading, in terms of execution of the trades, in terms of even if you're into trading or investing, if you're using like simplest of the simplest tools, even if you use RSI, moving average, Bollinger Bands, even there are few more tools. Even if you don't want to prefer this, no problem. You can choose any of the other tools. But this is my strong recommendation that go deep, not broad. Rather than learning hundreds and hundreds of tools, use any one tool, like go deep into it. What is RSI? What is this? What is range shift? What is divergence? And so on. You can learn a lot of concepts. You can go deep into it. And even in upcoming videos of Technical Saturday series itself, I'm going to mention one topics based on which you will be able to have like a basic overview of what RSI is all about, that too in depth. So this is like a basic overview of what RSI is all about. And let's quickly jump into some of the examples of how the current market is performing. And one more thing which I wanted to mention in terms of RSI itself is that, yeah, one more concept which I wanted to share about RSI is that if the time frame is monthly, which means that is like a long-term trend. If the time frame is weekly, then it is then it's a medium-term trend. And if the time frame is daily, then it becomes a short-term trend. In terms of, you can consider like a positional trade, swing trade, and even for investment as well. But if you're someone who is into day trading, who is into BTST trading, like a small range, then for you, like even if you go for the lower time frames, that like it can be daily time frame, hourly time frame, then 15 minutes time frame, then for you daily becomes like the short term trend, then hourly become the shorter term trend, and 15-minute becomes the shortest trend. So this is like a overall perspective. And even while going through the example, I'll be explaining in depth of how this particular uh, RSI works like and how you can determine the speed of the market. So on screen, I have shared the chart of Nifty 50, the current scenario of what Nifty is performing like. So as I've already mentioned, if the chart is monthly, then it becomes like a long-term chart based on which we can see right now that RSI is above 60, based on which we can determine that Nifty 50 is outperforming, and that is in an uptrend. It is bullish. The long-term trend is bullish. Similarly, if we go for the weekly time frame, then on weekly as well, it is already sustaining above 60. And I've already mentioned that on 70-30, that's like an overbought, oversold concept. But right now it has started the main trend. And on weekly as well, it is completely in an uptrend and completely bullish. And on daily as well, as you can see, it is already sustaining above 60. Although in between, it tried to give slighter retracement and it broke 60 as well, once, twice, and thrice. At that point of time, it went into slightly sideways zone, and then again the overall perspective is completely bullish, based on which the short term trend, that is the daily time frame, is also sustaining above 60, forming a bullish trend. And similarly, as I've already mentioned, for hourly and 15-minute chart, as you can see on the lower time frame, for few hours since last so many days, almost from 7th of July till almost 15th to 16th of July, it was completely in a sideways zone on the short term trend of the short term, that is hourly time frame. And similarly, on 15 minutes time frame, you will be able to see that in between it also crossed 40 on the downside, based on which it was like a short term, like shortest trend of short term, which means 15 minutes time frame. The long term trend is monthly time frame. The medium term trend is weekly time frame. The short term trend is daily time frame. The shorter is hourly, and shortest is 15 minutes, based on which, as you can see, although the overall perspective, the monthly, the weekly, and daily are already sustaining above 60, but on the lower time frame, it is slightly in a consolidation zone. It is slightly in a consolidation zone, that is in a sideways zone. And similarly, on 15 minutes as well, it tried to cross 40 on the downside, based on which it gives lighter bearishness, it gives lighter downtrend as well. And similarly, you can go for hundreds and hundreds of chart, but the theory of RSI is going to be the same. No matter what chart you use, no matter what indicator you like, no matter even if you use Bollinger Bands, even if you use moving average and other tools as well, but the overall perspective of how RSI looks like and how it functions, it is going to be the same. Whether it is in Indian markets, whether it is in crude oil, currencies, commodities, forex market, cryptocurrencies, whichever markets you prefer, it's up to you. But this is how the basic functioning of RSI looks like. And I hope that from this particular video, you have got immense value and immense clarity of how you can use momentum indicator in order to determine the speed of the market. And make sure you share your biggest takeaways below this particular video, whether you are watching on Facebook or YouTube. Make sure you share your biggest takeaways below this particular video. And in upcoming videos, I'll be even going deep into this concept of RSI, because this is something which I've learned from my mentors as well. And even this is one of the quotation from my mentors, is that go deep, not broad, because there are hundreds and thousands of tools which are available in the market. But if you like, even if you use all the indicators and all the tools based on momentum, let's consider in terms of, as I've already mentioned, stochastic, MACD, RSI. If you use all the three tools at the same instance of time, then you'll be confused. But the market is going with the same pace, whether it is in an uptrend, downtrend, or in a sideways trend as well. It is going to go with its own trend. It is going to go in its own flow. But how do we determine in the most simplest manner is what we have to try in order to make good amount of money without any complications. So from upcoming videos of Technical Saturday series itself, I'll be sharing some of the concepts like RSI range shift, RSI range. Then I'll be sharing like positive reverse divergence, negative reverse divergence, and few more concepts along with examples. And I hope that from this particular video, you have got immense value. If yes, make sure you share your biggest takeaways below this particular video, and along with that, share this particular video with your friends and loved ones whom you feel that they need to start trading, like they're willing to start trading and technical analysis journey right from the basics. Then you can share this particular playlist with them. I'll see you in the next video. I'll see you in the next video of weekly mastermind session that is going to be posted by tomorrow on YouTube channel as well as on Facebook at 5 p.m. Till then, live fully, love openly, and make the difference today. I wish you joy and abundance in all you do.